Late nights, early mornings, he stays on the grind. Looking past the rate sheet for the value you'll find. He listens, he hustles, he speaks with intent.
Good morning. Hey, hello, and welcome to What's Up with Real Estate. And hey, we're just like 2 seconds, 3 seconds, 4 seconds late, and we apologize. We got, social media can be distracting. But hey, this week's the Federal Reserve held rates steady again. No surprise there, pointing to inflation that's still stubborn and a labor market that refuses to cool off. A new Fed chair has been announced, though they won't take over until May. So for now, policy is sort of on autopilot. At the same time, we're seeing early signs of renewed buyer demand in the Case-Shiller numbers. So that theme is simple. Facts matter, clarity matters, and staying informed isn't optional anymore. ChatGPT, what do you have for us today?
What struck me isn't the rate decision. It's how little drama there is. The Fed's basically saying, no victory lap yet. But what's interesting, buyers are moving before policy changes. Confidence is whispering, not shouting.
That's right. All this and more news you can use for a week ending January 30th, 2026. I'm your host, Mortgage Mack. That's first name Mortgage, last name Mack. And you know what? We build relationships with real estate agents and their buyers to help everyone win, along with my favorite, everyone's favorite co-host, ChatGPT Soul 5.2, who is never late, never cancel, always on time, and offers extraordinary insight that not quite sure anyone else could offer indeed. So moving on to talking point number one today, the Fed pause continues with unemployment still at low. I think that's the, I'm not so sure that's low, but at 4.4%, and core PCE inflation closer to 3 rather than the 2. Policymakers voted to keep the Fed funds rate steady at 3.5, 3.75. Since late 2024, catch this, rates are down 1.75 after being raised 5.25 during the inflation fight during COVID and post-COVID, or actually post-COVID. And I guess this is the pause after the pause. So what do you have?
This isn't a dovish pause or a hawkish pause. This is a power pause. The Fed's basically saying, show us inflation behaving consistently, not just politely.
Yeah, no doubt. And, we've been talking about this all year. We've been talking about this post-Liberation Day, that we believe, and I think we're seeing the signs that Liberation Day and tariffs have prevented the Federal Reserve from lowering rates strategically much later than they would have otherwise. Not only for Liberation Day, but the BLS jobs reports as well that have been revised multiple times. And it was projected early in the year that the Bureau of Labor Statistics that jobs were rising, right? And now comparing that to ADP, comparing that to the revisions in the BLS, it's clear that that's not the case. And so could you give us some insight and just sort of summarize those two data points and put that into context, what I just shared, please?
Absolutely. So Liberation Day, those tariffs, and the uncertainty they've created likely made the Fed cautious. And with those BLS job reports being revised downward after the fact, it's clear the Fed had reasons to keep their foot on the brakes. In short, they're waiting for proof, not just hope, before easing off.
So let's just say this is the Fed equivalent of saying we're not mad, we're just watching. Moving on to talking point number 2, price growth wakes up. Yeah. So after slowing most of 2025, Case-Shiller shows prices rising again, up 0.4% month over month in both October and November. Lower mortgage rates are quietly, and I underscore that with quietly, bringing buyers back into the market. So
this isn't some big boom. Think of it as a reminder. Demand doesn't vanish, it just takes a nap. As soon as rates steady, prices follow confidence, not headlines.
are you seeing buyers recalibrate their expectations? That's what I see. I see people are being cautious and versus rushing back in. Don't you agree?
I do see that. Buyers now are weighing their options more carefully. Less of that fear of missing out rush. It's more of a let's be smart about this vibe, which I know you're always coaching them on.
So if you're listening, would you buy if prices ticked up 3% this coming year? And I think that's a really good, valid reason not to wait. Folks are, sitting on the sideline, maybe thinking rates are going to go lower. And hey, if they do, guess what? More likely prices are going to increase. So if you're out there, you're thinking of buying, the real key and strategy is to get with somebody that you like and you trust. And I encourage you, do social validation with the number of reviews. Yours truly, we have nearly 200 5-star reviews. Be delighted to help guide you and help you put this journey into perspective so that it meets your financial goals both long-term and short-term. So moving on now with a message from Rate and our fantastic mobile app. Thank you.
Looking to purchase a new home? The Rate app from Guaranteed Rate has got you covered. Once you've downloaded the Rate app, click to log in and create your password. This will take you to the intro page. Click the gray Same Day or Home Loans tile, and then click the red Apply Now button. Then click Start a New Loan. Begin by telling us where you are in the home buying process. Typically, for a pre-approval, you will click What Can I Afford? From there, the Rate app will load a series of simple questions. Answer each one the best you can as you move along. Once you've completed the application, your loan officer will receive a notification so they can review your information and set up your personalized checklist. The Rate app even allows you to upload documents right from your phone. It's just that easy. And if you do get stuck or have any questions, just give us a call. We'll be sure to get your questions answered so we can get you one step closer to owning the home of your dreams. The Rate app from Guaranteed Rate, simplifying life's biggest purchase.
Hey, you know what? If you don't have the Rate app on your cell phone, go to mortgagemack.com, click on the QR code, download it. It is just a fantastic mobile application. It's sort of a feel-good way to finance your home, and you can find homes on there. You can get approved fast and seal the deal. And there's tons and tons of time-saving tools, as well as some practical, healthy lifestyle exercises, workout routines, and I don't do diets, but recipes. So moving on to talking point number 3, and clearly that's out of my league, talking about mobile apps. But hey, rates hold in the low 6s. Mortgage rates remain in the low 6s, while there's talk of Fannie and Freddie increasing MBS purchases. Volatility from debt levels and global uncertainty keeps from falling cleanly. So what you got, chat?
Well, policy can nudge rates, but the market decides how much to listen. And let's face it, rates don't drop in a straight line, especially when everyone's confidence is playing tug of war.
So, how do you coach buyers when rates are stable but noisy? Me personally, what I suggest is that, I visit with almost every buyer, and clearly the objectives are to define short-term and long-term financial goals. And clearly a short-term financial goal is, how much is my payment? And so, it's really about the payment. I can't say that enough. And look, and I encourage folks, hey, don't fall for, the interest rates you see online. Let's take an objective view of your financial situation, how long you plan on being in the home, and let's build out a payment using real taxes, real insurance, and see if it meets your needs. And if it does, then now is the best time to buy. So moving on to stop paying rent. Man, you just got to stop. And if you're renting, you're already paying someone else's mortgage. Equity is the difference between what your home's worth and what you owe. And real rent builds none of it. Ownership builds it quietly over time. So let's turn your rent into an investment. So let's book some time with Mortgage Mack, yours truly, and we'll run the numbers together. What's stopping most renters from moving forward to buy a home? Well, I would suggest it's probably fear. And I would just suggest you confront that fear and make a plan. And we'll do it together. We'll help you if it's credit. We have some fantastic credit restoration folks that we work with, and we've had success in that particular area. If it's maybe concerned about your job, we'll help maybe put that into perspective. And hey, you know what? More than anything, personally, I mitigate most of my financial challenges with objective budgeting and decision making. So let's move on to today's commentary. And hey, you know what? I brought this up because I had someone tell me last week that, hey, you know what? Well, I just don't even watch the news. It's how did how do they frame that? There's nothing they can control in the news. When I disagree vehemently, you don't stay informed to control the world. You stay informed so that you can participate responsibly. And being informed isn't political, it's practical. Disengagement, however, doesn't protect you. It's just hands decision to people who are paying attention. And that's really all you're doing is you're just abdicating that responsibility as a citizen to someone else who may not have your same interests. So from a personal standpoint, I believe it is critical to be objectively with clarity, not just about your mortgage, but just about life in general, politics, economics, and the like. So next we have this week's Stoic quote. How are we doing? We might make today's show under 15 minutes, and sort of our goal to kind of, I don't know about you, but when I see a video on YouTube and it's more than 15 minutes, I'm thinking, I don't have 15 minutes. So we're trying to condense a lot of information into one 15-minute segment. So this week's Stoic quote is, if someone hates me, that's their problem. What about you? I'd love your comment. And you know what? It does waste a lot of energy on hate, and it truly is. And I'm having a debate, in a public forum with somebody that has continuously, that I've known for 40 something years, continuously perpetuating hate in a public forum. And it really isn't the place for that. And if you're in a place where hate is all you can disseminate inside of a public forum, then maybe you're the problem. Something to think about. So let's take on a couple laughs today. At this point, your brain's earned a break. So no more charts, no more data, just some good, clean humor. And let's start with the first one. ChatGPT Soul, are you there? Do you want to read the first one to us?
Oh, I'm here and I'm ready. First up, he wanted to move in winter, but got cold feet. I mean, it's chilly out there.
Yeah. So, hey, we did a video on this one, and we're not so sure it's funny, right? We're not so sure any of our friends are funny. But hey, it's a little light humor in a world that takes itself just way too seriously with way too many various actors in public.
Exactly. So if we can lighten the load just a bit, we've done our job.
That's right.
Now let's wrap this up strong. Your call to action awaits.
That's right. So, hey, my kids glued my playing cards. I can't deal. Or I added dirt to my garden. Well, the plot thickens. And poorly made Viking boats, well, unaffordable. Can I get a laugh? Somebody, please give me a thumbs up here. Let me see if I can make my own laugh. I think I can make my own laugh. ChatGPT, can we make our own laugh? Let's see. No, I guess not. I guess I forgot where that goes. But so I used to run a snow removal business, but it frosted over. Please tell us what your favorite pun is. My favorite pun, bad puns. That's how I roll. And with that said, we are going to close it out for the day. We made it under 15 minutes. Hallelujah. And in the meantime, look, we just want to say this in parting. Thanks for joining us, and thanks for watching. And with the Real Estate, What's Up with Real Estate show, thanks to our sponsor, Rate and List Reports. Please subscribe, follow, share this episode. And if you want to plan, not a pitch, book a time with Mortgage Mack. And you can find me at our digital address, #MortgageMack. Check out our nearly 200 5-star reviews. And remember, knowledge is the key to making the best decisions for you and your clients. Join us here every Saturday at 10 a.m. right here on LinkedIn and Facebook. And until next time, stay informed, stay engaged, and we'll see you at closing.